I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is Thursday, August 4th.
And this is the interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. We do this Monday through Friday. And remember, this is not financial advice. This is for informational purposes only.
That's right, folks. We are smart, but we are not that smart. Which hopefully that doesn't sound too bad.
We're not allowed to give financial advice on
Yeah.
YouTube. It's just bottom line. So every single time we do this video, we have to plug
We have to say that boring stuff, but we
Yeah.
are pretty smart guys. So
All right, so interest rate update. Where are we? The 30-year fix today we see slightly lower than yesterday, 4.75%. The 15-year fix at 3.99.
the 30-year FHA 4.375, the 30-year VA 4.375.
These quotes have no points, no extra fees based off of these loan assumptions for conventional FHA and VA loans. And I think this is really appropriate today. See, this is a conventional loan. When we talk about like the 30-year fix conventional, there is Freddie Mac and Fannie Mae. Every week, they basically broadcast what the rates are. They basically do a survey, or the Freddie Mac at least does a survey.
Right, and Fannie and Freddie are the quasi-governmental institutions that actually back our mortgages. They're what keep the mortgage rates where they are. Otherwise, they'd be like 10%.
Yeah. And then today, Yahoo Finance puts out an article, mortgage rates fall below 5% for the first time since April. If you've noticed in watching our channel, we've been showing rates.
Yeah, we've been down there for, what, like 3 or 4 weeks?
Yeah, exactly. And then so if you read this article, which was out today, you'll see that it does say 4.99. If you go but you actually go to the Freddie Mac website,
yeah,
it is showing 4.99, but it's coming with 0.8 fees. That's what, based on their survey, that's very, very significant, because on a $400,000 house or $400,000 like loan, that would probably be a $3,800, $3,700.
Yeah, that's right. So again, what we always go over on this interest rate update is that we have good interest rates and they don't come with extra fees. No extra anything hidden. There are standard closing costs, nothing extra. What this is saying, which Ed is pointing out, is that this is a 4.99% interest rate, which is actually not that bad. It's not as good as our rate, but it's not that bad. But it comes at almost a 1% cost, extra cost.
Extra cost. And based off of these loan assumptions right here, I know that sometimes this can be confusing for people, but based off of those loan assumptions, you should be able to get 4.75% with no extra fees.
Exactly.
All right. And of course, be sure, your loan officer is going to have to consult you with your exact scenario. So be sure to look at that. We had a viewer yesterday ask us to look at a scenario for him that he liked, that we were showing what he needed to qualify for. And his name was Hendy. That's the name of the viewer. And he was asking, hey, I'm buying a $350,000 house and putting 20% down. Hey, can you run that chart for me? And again, we're just showing what his income would need to be based off of maybe some hypothetical debt. So if Hendy has $100 of mortgage debt, non-mortgage debt like credit cards,
which basically is considered no debt. If you only have $100 a month in debt, you can just tell me you're almost debt free.
Right. If you had like $500, maybe a car, $1,500 a month, can you like that's like maybe, what did you say yesterday? Like a Tesla payment?
Right. That's like a couple of cars, a student loan, and a couple credit cards.
Yeah, and then $2,500. There's a lot of student loans. Maybe it's a second home that you own.
Right, a boat. That big RV. That you love taking out in the summer.
So here's what the sales price would be based off of a hypothetical scenario. This is the payments hypothetical. Annual income needed to qualify about $50,000. If you have no debt, and then as you climb up, if you do have, let's just say, $1,500 of debt, you need to make about $87,000. So $350,000 sales price. If you have no debt, about $50,000 of income.
Yeah, and these are very, very generic scenarios that we put together. Obviously, everyone's different. This has to do with credit and all the fancy
Yeah.
stuff. But this is a good like napkin guide. You could actually probably print this and say, there's a good chance this is pretty dang accurate.
If you have any scenarios that you want us to run and show you as well, just be sure to comment. Be sure to subscribe and like, and we'll be back tomorrow with another update.
All right. Thank you, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.